Hello and welcome to Pro Trader Strategies market commentary for Friday, January the 17th. My name's Eric Wilkinson and you very well may recognize me from mainstream media where I've talked about the economic data, geopolitical and economic environments in and around the United States and globally. What I'm here to do in these daily market commentaries is actually talk about those same things, but the economic data, how we see that impacting the overall market, but then add another layer to that by talking about these option strategies that we can implement into our portfolios in order to increase our yield and our alpha. So without further ado, I need to talk about, please remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, with all that out of the way, let's get it on with some economic data. We have some economic data. I would not say it's good economic data, but we can talk about across the pond. We got retail sales coming in out of Great Britain. It was expected to be a positive 0.5%. It came in at negative 0.6%, so a miss by over a percentage point. And then last month's number was revised down further from negative 0.6 to negative 0.8. Now, this being a holiday season, we would expect that to have been a little bit better positive, most likely, but it was negative, and we've seen 3 negative readings in a row here where we were expecting a positive number. So that is not good for Great Britain. They were one of the ones that were actually starting, were looking pretty good, but it looks like they're getting pulled down with the rest of the European region. We got European final CPI coming in at 1.3%, which was in line, and final core CPI coming in line with expectations at 1.3%. So nothing really to see there. Here in the United States, we got building permits. Now, one of the things I always talk about building permits is you can pull as many permits as you want. And if it's higher than expected, it doesn't necessarily mean you build on those permits. But when you're pulling back on permits, it is the expectation you don't expect to build, all right? So one of the things we look at is, especially when this number starts coming in lower than expected, and it did. It came in at 1.42 million permits pulled, expected to be 1.47 million units pulled, so lower than expected by 50,000 permits. Housing starts on the flip side, though, came in a lot better than expected. We got a 1.61 million units started and expected to be a 1.38 million. So they're using up the permits that they pulled for these things, but they aren't expecting to need a whole lot more. So going forward, we're going to have to keep an eye on that as we see these builders, what they're actually doing. Building permits is forward-looking, housing starts is hindsight, but that building permits is a little bit iffy there, but they are building at this point anyway. They must be, one of the things we kind of look at is what are they expecting? Maybe they're expecting it to wane a little bit and they want to use up some of these permits that they've already used and take another look later on down the road. All right, we got capacity utilization in line with capacity utilization rate coming in line with expectations at 77%. We did get industrial production pulling back. Was supposed to be unchanged, came in at negative 0.3%. Last month's number was revised down from a 1.1 to a 0.8. So big revision to the last month's number, down, not looking too good on those two fronts there. We also got University of Michigan consumer sentiment coming in at 99.1, which was pretty much in line with expectations there. That's actually a pretty good reading. We'd love to see that number above 100 though. Then Jolt's job openings came in at 6.8 million openings. It was expected to be 7.24 million. They did revise last month's number up nicely from 7.27 to 7.36 million job openings. This one, though, this 6 handle, that is the first time we've seen that in about 12 months. And that was like a low trough. So if you mark out last December and go a little bit further back, we're talking about 18 months or something like that. So Pretty low reading there. University of Michigan expectations for inflation came in at 2.5%, which was pretty much in line with expectations, maybe a tick high. And we've got a couple of Fed governors speaking. We've got Harker and Quarles speaking today. So Harker probably is done speaking. Quarles is later on this afternoon. So, all right, that's about it for the economic data. Let's take a look at the overall markets. Seeing crude oil pretty much unchanged on the day, testing that $59 a barrel earlier this morning, and that's starting to line up with the 50-day simple moving average. I've talked about this, especially with this economic data we're seeing here. We saw earlier on, remember, Philly Fed came in a lot lower than expected. The manufacturing sector, I can't see really having the demand for crude oil that is expected, especially up in the 60s. Most of that was having to do with the tensions in Iran and Iraq. So we're seeing the market come off. I could see further weakness coming into crude oil if we continue to see economic data wane here in the United States and across the pond. Let's take a look at gold futures. We're starting to see a little bit of a push higher here with gold futures wanting to stay above that 1533 area where we have the Fibonacci line there. We did test that a few days ago. We're starting to rally up, and most of that has to do with a little bit what we talked about yesterday, being the safe haven kind of asset in gold where people are maybe seeing some weakness. It's given us a little bit of a heads up. Hey, there's a little bit of weakness headed towards the equities, probably based on this economic data that we've seen there. I would not expect the market to really celebrate that unless they thought maybe the Fed was going to do some more quantitative easing in order to spur the market a little bit. But that being said, we're looking at gold starting to push a little bit higher here, so that would kind of lead us to believe that maybe equities are starting to wane a little bit. Bonds coming off of being over a point down earlier today, testing the 200-day simple moving average here, bounced up and away, and now we're back above that 157 handle there. So back into that sweet spot I've talked about between 160 and 157, I think is where we're really going to start to see this market really build out. Most of the Fed governors are talking consistently amongst the individual FOMC members that they are not planning on raising interest rates or lowering interest rates at this time. It is all data dependent, and at this point the data not looking too great. VIX is off a little bit. We have a mixed bag in the equities. I would expect to see the VIX start to move a little bit higher, maybe even back into the teens. We've got the Dow Jones Industrial Average in positive territory, up 32 points. And we are seeing the NASDAQ, well, it was just in negative territory not too long, but seeing a bit of a rebound here. Keep in mind, this high is just in the early mornings before the market opened. I think the high right now here in the NASDAQ is 91.77-ish, maybe in some change there. So this market, though, with that all-time high, we always talk about the market wants to print that, but I don't know with the economic data if we are going to print that anytime really soon. To me, it looks like we are due for a bit of a rollover. I don't know that we're going to go all the way back down and test these Fibonacci's way down here, but I do expect at least somewhat of a correction, maybe down into the 87 even handle. So that's quite a ways of a drop, but it does feel like we do need somewhat of a correction here in the equities. E-mini S&Ps is positive on the day. Again, this print was printed overnight. And the day session not quite reaching that level. As you can see, that happened just in the early mornings before the open. And once the market opened, we did try to flush out some of those longs that had long inventory overnight. And it's a mixed bag of where we're going to see this market go on sentiment. But to me, we're not really seeing great economic data this week. So it seems to me that the market should struggle a little bit to really have a robust rally whatsoever. All right, now I talked about this with eBay yesterday, and you can see eBay falling off and away by about 43 cents from yesterday's close. It came 1 penny away from my order at $36. I was working a $36 offer. You can see we missed it by a penny up there on the high. If you look up here at the high area, I missed it by 1 penny, the high being $35.99. I was at $36. So not out of my eBay yet, so not out of the woods on that one. Everything else in my portfolio is relatively the same. So that's all I've got for you guys today. Yesterday's webinar went off very well. Thank you guys all for the participation in that. It was on the poor man's covered put when we're adding some bearish strategies to our portfolio. I was looking to do something in there with like TLT or something like that, and a couple of other ones where I wanted to get short some bank stock, maybe U.S. Bank, because they missed on their earnings. Most of the other banks are doing pretty well. Morgan Stanley did very well on the upside. I'm going to hold off on that because I have a couple of bearish trades in my portfolio already, and I don't want to, at this time, get too many negative deltas in my portfolio. But Monday, and depending on how this market sets up today with a top, that might be the time where next week I'm going to start adding a little bit more negative deltas to my portfolio, get a little bit more delta neutral in my portfolio. I'm overall long at this point. So keep track of these daily market commentaries, because we will talk about portfolio theory and how we're using our deltas and these different strategies we're talking about in the daily market commentaries and in the webinars, and how we are managing this overall position. All right, lowering our cost basis on some of our long stocks and short positions and things of that nature. So check that out. That's all I got for you guys, other than if you can't take that, take it easy.